Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the pop on the Bitcoin chart, where we did have, Bitcoin just have a weekly closure at one level higher, right? And I did turn that level green in anticipation that this next candle will hold it. However, that could be defeated if, Bitcoin does end up retracing this naked candle, which we don't always do. You see this exposed candle over here. You see we only, recovered 75% of this candle with this price action. And so we don't actually have to dip down, or we don't have to dip down that much. We could just hold this level and have a nice squeeze as the price moves between this 9 EMA and the 21 EMA, and then perhaps even get a megalithic pop up to $30,000, maybe $25,000, something like this. There's the 200 EMA on the weekly right here at $26,000. All of these are pretty good targets if we do get a nice weekly squeeze. And if we do anything more than that, we can talk about it at the time. However, you also see that we had a hint of a weekly squeeze over here. That one ultimately failed. This could end up being a failure as well. And, the key player in this is going to be the US dollar via Jerome Powell and the Federal Reserve on November 2nd when they make their decision on interest rates. So is it going to be 75 basis points and basically have us go sideways, possibly down a little bit? Or is it going to be 50 basis points, or maybe even a pause, which could just have the charts screaming upward, right? So all eyes will be on the Federal Reserve on November 2nd. And guys, if we do shift down just to the 4 hour, which I love because we can see so much detail, you can see that the good old alpha momentum pools did hold up for the day, where if we just remove these EMAs, you can see that we did get a nice bounce on top of the pool. We had some nice bullishness for the day. It actually held above the momentum pool, so everything was pretty cool. But unfortunately, at the end of the day, a new epoch started, and so we are kind of just meandering down to that 2 to 5 day projection that I made, which is why I make a 2 to 5 day projection, because we could easily come down to those levels, and violating those levels wouldn't be a good thing. We would want to hold on top of them, and hey, we are holding on top of them. So the good old alpha momentum pools are just showing that we're still maintaining a fairly good bullishness, which could eventually have an accumulation that does pop, and we don't want to violate those areas, guys. And so, however, because we are having a pretty significant pullback here, I should update the momentum pools. So let me just take a look at that. Here's the new day that we're in, and then here's my next 2 to 5 day projection. And so let me just turn off these old ones, and what you can see is that unfortunately we're starting out the day on the wrong foot, which is that we are swimming around in the momentum pool. Okay, and so this really is not what we want to do. We do want to be solidly on top of that pool, and just get on top of it here, and then perhaps have a little bit of a bounce. And then for the 2 to 5 day projection, of course, it would be nice if we were on top of that one, although it's not critical for maintaining, a momentum on the daily. So, guys, I think I do need to just realign this just slightly. These things can get a little bit off. There we go. There we go. And so if I drop back down to the 4 hour just so that we can see detail, there we go. You can see us entering the daily momentum pool to the downside, right? And so we do have time to recover this pool and get on top of it. And we really don't want to be violating the bottom of either the daily or the 2 to 5 day projection. As long as we're swimming here, no problem. We really do need to get on top of it. So for that aim, of course, I did have the the signals that I showed you in the previous Bitcoin episode, and we did hold above that bullish line. We are violating it. So I need to see, if this can be recalculated to show our current status. And so here's my update. And what you can see is that, in fact, it doesn't look that great, right? It doesn't look that great anymore. And so while the last couple days, did have a little bit of juice in it, it mostly was just a consolidation. We still have this potential, wedge going on here. And but really, to be bullish, we need to get over 20,830. Now, you can front run that. You can front run that solid bullishness with this bullish-ish ness, basically by getting on top of the daily here. But ultimately, we will need to get above that 20,830 in order to capture that 2 to 5 day momentum and basically complete an accumulation wedge, which would then pop us up potentially to this uber bullish area at 21,355 is my estimate for where we would have a fairly substantial continuation. But guys, you can see that we do get into that bearish-ish territory right here around 20,375, mostly because we're going to be losing some critical support just on a support basis, but also, just watching out for various types of momentum. And then we will lose a couple of different critical momentum areas if we're under 20,275. So solidly bearish under 20,275. And if you do just want some type of a target for having lost the majority of our momentum, then I would suggest 18,831. This is based upon kind of a liberal estimation. A more conservative estimation would be a little bit lower. We do have a couple levels here that could potentially catch us in different types of momentum, but we will have lost sufficient momentum that I don't think it's recoverable, and so that would be my front runnable kind of macro downside level, 18,831. So there you have it, guys. The alpha momentum scale, the alpha momentum pools, and if you guys want to be uber bullish, we got to get above 21,355. Solidly bullish above 20,830. Bullish-ish above 20,630. Just watch out if we lose that. Bearish-ish under 20,375, but we could always potentially pop up, so just watch out. And then solidly bearish under 20,275, and pretty much losing the game to the downside on the macro if we lose 18,831. All right, guys, that was your alpha for the day. Stay safe and happy trading.